What's up, Internet? My name's Ian Bloom. I am your resident financial life planner and huge nerd, and today we are going to be talking about some non-stock, non-bond investments. And the reason that we're covering this is because I got a question. What are some investments other than the traditional S&P 500 style stock funds and the, Barclays Aggregate Bond Index style bond funds out there that I should be investing in? And while I can't tell you what you should be investing in, I can tell you about some categories that I utilize with clients or have had a lot of discussion around with clients, because that tends to be a good indicator for things that you might be thinking about or maybe should be. The first that I'll talk about is REITs, or real estate investment trusts. And REITs are interesting because they are technically stock, but they are stock investing in companies that only make their income, or primarily, as in like 95%, make their income from real estate transactions. Usually these companies are buying up commercial or residential rental properties and renting them out to individuals or companies in order to generate an income. And then they are paying you a percentage of that income based on what they receive. These investments, while they are stock, tend to perform a little bit differently than stock funds because their income is a little bit more stabilized and their profit is a little bit less dramatic when they make profit. Sometimes they do make large profits by selling these buildings that they've captured at a large profit, but generally a lot of their income is coming from, income, right? Which makes it a little bit more stable and a little bit less crazy. That being said, real estate investment trusts are not something that gives you a guaranteed income, so to speak, because there is always the potential that this real estate fund has trouble renting out their properties or has a profit margin issue. Now, that is a little bit less likely when you talk about REITs that are investing in whole regions of real estate, simply because there's a ton of rental properties and a ton of income. The next fund we'll talk about are commodities funds. Commodities are real goods, and so I'm talking about gold, silver, pigs, lumber, basically things that are traded in large volumes on exchanges. Now, commodities funds will have a slew of commodities that they invest in, and a lot of their return comes from not only trading the commodities at a profit, but also the appreciation of the commodities in their portfolio. So if gold goes up, so too will your commodities fund to some degree if it owns gold. The last thing that we'll talk a little bit about today, which I've addressed in past videos, but I keep getting questions about, is cryptocurrency. Cryptocurrency is something that a lot of investment advisors are not really addressing. And the reason that we're not addressing it as much is because the regulations around it, if they exist at all, are incredibly loose, which means that it's inherently a lot more risky, not only for us, but for our clients to be doing business with cryptocurrency. That said, it is something that your investment advisor or financial planner like myself should be willing to have a conversation with you about. So if you are working with somebody who's not forward thinking enough to even understand what cryptocurrency is or how it functions, that may be a sign that you should be having a conversation elsewhere. Cryptocurrency is not necessarily built for long-term appreciation as it stands right now, but that does not mean that it is something you should be avoiding entirely in the future. The last thing that I want to address is anything outside of stocks, bonds, or what I just talked about. Often these are annuities or complicated investment products or private placements, and these investments are things that you can consider, but I would consider them very closely on a highly researched basis. As it turns out, there are a lot of people still left in our industry that make a lot of money selling complex investment products that you may or may not even want to be investing in, but they will do a pretty good job of trying to sell them to you. So just keep in mind that anything outside of the general categories of investments that we've discussed is inherently a little bit less explored. Now, less explored does not always mean bad. It just means you have to pay way more attention when considering it as an investment option. So I hope this video was of some help to you and helped break down the complicated world of alternative investments and investments outside of the traditional stocks and bonds. If you have any more questions, feel free to reach out, like, comment, and subscribe to the channel, and I hope you have a wonderful day.